Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. We're excited to get started. If you do have questions or topics that you wish to discuss, please chat those over now, whether on this topic or either unrelated topics. We're happy to discuss it all. Okay, great. So now we're ready to get started with our daily Solo 401k session. It's a webinar, it's a Q&A session. Our goal is to help you stop overpaying taxes and start building real retirement wealth. Today's topic is why should I set up a solo 401k now? But again, if you have questions or topics on other topics as well, don't hesitate to chat that over and we'll field those questions as well. So yes, the meeting is happening, so please don't hesitate to chat over questions or topics. Ultimately, it's your chance to get answers. Please use the chat to ask questions on today's topic or anything else. Please chat them over now so that we can be sure to get to them all. As always, the presentation is being provided for educational purposes only. Should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So let's dive into the prepared slides that we wanted to bring. But again, if there are other questions or questions that come up as we go through it, don't hesitate to chat it over. Here's a quick overview of what we're going to talk about. What you'll learn today, why setting up a solo 401k now matters, what you lose if you wait until 2026, the key benefits you lock in if you set up a solo 401k here by the end of the year, by December 31st, 2025. And then, of course, how to get started quick and easy. So the top reasons to set up a solo 401k now, in other words, by the end of the year, by December 31st, 2025, is to be able to lock in the ability to make contributions. So if you set up a plan by December 31st, 2025, you'll lock in the ability to make all types of solo 401k contributions by the business tax return deadline, including any timely filed extension in 2026. So that's going to give you the most contribution options and the most time during which you can make those contributions. So you can make employee, you can make employer, you can make voluntary after-tax contributions anytime next year by your 2025 business tax return deadline in 2026, as long as you sign up by the end of the year. We make it very easy to sign up. It's just a quick 3-step process. We establish the plan, meaning the documents, within the same business day when someone signs up. That means you can take your time to open up accounts, to determine how much you're going to contribute, to make those contributions in 2026. So that's reason number one, why you should set up a solo 401k now. Reason number two is the tax credits. So setting up our solo 401k plan will enable the solo 401k owner, the solopreneur, to be able to claim $1,500 in tax credits. Now, the way that those tax credits work is they're spread out over 3 years. So it's a $500 per year credit for 3 years. So if you sign up now, if you sign up by December 31st, 2025, then you'll preserve the ability to start claiming those tax credits when you file your 2025 tax return. So $500 for 2025, then again for 2 more years, as long as you maintain the plan with the automatic enrollment feature. Now, it's noteworthy, of course, that we automatically draft the plan documents to include the feature and the required notices that are needed to claim the credit. In order to be able to claim the credit, you need to have a solo 401k plan that includes an automatic enrollment feature. So that an automatic enrollment feature will establish a default 3% contribution percentage. But the solo 401k owner, the solopreneur, as a participant in the plan, has the right to opt out of the default. Just because they exercise their right to opt out of the default doesn't mean that the plan doesn't include the credit. It doesn't mean they're not eligible to claim those tax credits. So, stated differently, you don't have to make a contribution in order to be eligible to claim the credit. You can opt out of the 3% default contribution percentage, and that'll then allow you to make contributions in whichever amount or schedule you prefer, of course, subject to the limits and the deadlines. Reason number three, roll over and invest in alternatives. So, one of the top use cases for our solo 401k plan is that you're not just limited to typical brokerage type investments. Of course, the plan allows for those types of investments. And we have thousands and thousands of customers that we've helped open up accounts at brokerages like Fidelity, Schwab, just to name a couple, where they have the ability to invest in stocks, bonds, mutual funds, ETFs, certificates of deposit. But in addition, the plan allows for investing in non-traditional investments, true alternative investments. This could be real estate, cryptocurrency like Bitcoin, private placements, notes, precious metals, more. So for those that want to invest in alternative investments, they often will want to have checkbook control over the money. Now, there are a number of brokerage firms that do provide a free checkbook, so you can have checkbook access. For example, Fidelity provides a free checkbook, Schwab provides a free checkbook. But for those that are really looking to invest in alternative investments, they may want more. They want to be able to have the ability to easily ACH money in and out of the account. They may want to have debit card access. So for those customers, a lot of times they'll want to have a bank account. And we've helped customers open up accounts at hundreds of different bank accounts and credit unions. And it's certainly acceptable to have both a bank account and a brokerage account. So they might say invest their money into the market, the stock market, between deals, for example. Reason number four, why some would say that you should set up a solo 401k now is that you have the ability to take a solo 401k loan. So you cannot take a loan from an IRA. The IRA rules don't allow it. You can only take a loan from an employer plan, like a solo 401k, provided that the plan allows you to take a loan. So our plan documents include that feature. So that means you can withdraw money from your solo 401k. You don't have to pay taxes. You don't have to pay penalties. You can use the money for any purpose whatsoever. It could be used for a personal purpose, an investment purpose, debt payoff, etc. And again, it's not subject to taxes and penalties as long as it's documented as a solo 401k loan. We handle the documentation requirement as an optional free service for our customers. We'll prepare the documents within 1 business day when clients request it, as long as it's within the solo 401k loan terms and paid back according to the required terms. So those terms provide that you can borrow up to 50% of the balance, not to exceed $50,000. The loan needs to be paid back in either monthly or quarterly payments. It's up to you. Equal payments of principal and interest. The interest is either prime plus 1% or a CD rate plus 2%, with those payments spread over a 5-year term. Reason number five would be the ability to access expert compliance support. So we are a solo 401k plan provider. We specialize in solo 401k plans, and we have a full feature plan that allows for a range of advanced features which prompt our clients to sign up with us, whether that's the ability to make mega backdoor Roth contributions, the ability to invest in alternative investments, the ability to take a solo 401k loan. And we support our clients through their objectives, right? Answering questions about educating them on the solo 401k contribution limits, preparing the loan documents that I mentioned, educating them on the mechanics of investing in alternative investments, right? We don't hold their money. We don't give investment advice. So we're very compatible, right, with advisors because we're there as a complementary service as the plan provider. And so we provide that support when it comes to accessing those features. But then on top of that, we provide the compliance support as an optional free service. So, of course, plan documents change and need to be updated as laws change. So we automatically proactively provide mandatory plan updates and amendments to our customers. But there may be additional compliance requirements. For example, Once the value of the solo 401k plan assets, so the investments, the accounts, even the value of any defined benefit plan that might be sponsored by the self-employed business, once the total value exceeds $250,000, there's an informational tax filing requirement. So the plan would need, or really the sponsor, the self-employed business, would need to file on behalf of the plan a form with the IRS, which is referred to as Form 5500 EZ. So we prepare that Form 5500 EZ as an optional free service for our customers. They just need to let us know, or their advisors let us know. Once the value exceeds $250,000, then we add their plan to the queue to guide them through that 5500 EZ filing requirement. And we do it under the electronic filing system to make it easy for the customer. Another key compliance requirement will be if there's a distribution from the plan. So if assets are withdrawn, or if there's a conversion, let's say assets are converted, right? Let's say you have money in your pre-tax account and you move it to the Roth account. Or let's say you're making a mega backdoor Roth contribution. That's a two-step process where the funds are first deposited into an after-tax account before they're then moved to a Roth account. So that second step, that move from the after-tax account to the Roth account, needs to be reported on a Form 1099-R. And we handle that as an optional free service for our customers. They just need to let us know when there's a distribution event or a conversion event to give us the information we need to prepare the 1099-R. Just let us know in a timely fashion. Now, what happens if you wait? What happens if you don't set up the plan by December 31st, 2025? Well, you'll lose the ability to make all types of contributions by the business tax return deadline, including any timely filed extension. You only be able to make some contributions, not all, right? So if you set up the plan in 2026, you could still make employer contributions or voluntary after-tax contributions by the business tax return deadline, including any timely filed extension, but you wouldn't be able to make employee contributions, with the only exception being if the business is taxed as a sole proprietorship. But even if the business is taxed as a sole proprietorship, if you don't set up the plan by the end of the year, you would have to set up the plan and make those employee contributions for 2025 by April 15th. In other words, you wouldn't have the possibility of being able to go out until the extended tax return deadline date of October 15th. So to give yourself the most options, the most flexibility in terms of timing, regardless of how your business is taxed, it's best to set up the plan by December 31st, 2025. And we make it super easy because we do it the same business day. You can take your time to open up the accounts, to determine how much you want to contribute, to make those contributions in 2026 by your tax return deadline, including any timely filed extension. Another consequence of delay is you delay the ability to start claiming the tax credits. Remember, those are $500 per year for 3 consecutive years. So if the plan is not established until 2026, the first year is not going to be until the 2026 tax return. Whereas if the plan is established by the end of the year, then that first $500 tax credit could be claimed with the 2025 tax return. Delay rollovers, delay loans, delay Roth strategies, delay tax deferred growth, and then risk non-compliance if you're restating an existing plan and fail to file the 5500 EZ if required, right? Let's say we have many customers who already have a solo 401k, but let's say it's a basic plan. Let's say it's a basic plan that was set up at a brokerage like Fidelity or Schwab, and the value is already over $250,000. Fidelity and Schwab are not going to prepare the 5500 EZ, but if the individual were to upgrade their plan to our plan here by the end of the year, then we would handle the 2025 5500 EZ as an optional free service. They would just simply let us know when they sign up that their plan value exceeds $250,000. Then we'll add their plan to the queue to prepare the 5500 EZ that would be due by the end of July 2026. So next steps is fast and simple. It's a 1-minute application. You can simply go to mysolo401k.net, click on open account, click on solo 401k. It's a quick 1-minute application. That's how we capture the information we need to prepare the documents specifically for your business. And we do it within the same business day. Once we receive that application and payment is made, we'll send out an email with a link to our secure portal where you can access the documents. And that's all you need. Once you sign up, we'll establish the plan the same business day. Take your time to open accounts and fund when ready, even in 2026. Thank you so much for checking out today's session. If there are questions or topics, please don't hesitate to chat those over. If this information is helping you feel more confident about your future, please take 1 second to like and subscribe. Liking will tell the platform, tell the algorithm that the content is valuable. That's going to help other solopreneurs like you, other advisors like you, to find it so they can access the information and they can build their retirement security. Subscribing to our channel is going to guarantee you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. So please just take a second to like and subscribe, whether you're on LinkedIn, YouTube, X, Instagram. We would greatly appreciate that. We also want to invite you to our community. We do have the largest community of solopreneurs, solo 401k owners. There's over 30,000 members, and that translates to a vibrant community. We have vibrant forums. We have a library of videos and webinars. There's a ton of ways to learn and to share the knowledge. It's totally free to join. All are welcome. You don't need to be a client. You could just be interested in the topic. You could be advisor, etc. So please don't hesitate to join. You can do it quickly and easily at mysolo401k.net/my community. All right, well, it looks like that's it for today's Solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here tomorrow with more crucial content to help you secure your retirement. And we got a question that came in from Lisa. Thank you so much. If there are more questions, don't hesitate to chat it over so we don't miss it, so we can get to it. So thank you for bringing the questions. So I have a question about existing my solo 401k. I already made an employer match before knowing that this should actually do this via voluntary after-tax and mega backdoor Roth. Since it's already been run through payroll as a 401k match, shall I put the funds in the traditional or Roth 401k? Well, it sounds like the funds have not actually been deposited. So if that's the case, number one. Number two, I would note that technically matching contributions do not apply to a solo 401k. They only apply to a full-time employer plan. Instead, with a solo 401k, you can certainly make an employer contribution, but it would be considered to be a profit sharing contribution. So it's technically not a match. There's no prerequisite that you first make an employee contribution. The second clarifying point is that contributions don't have to be made through payroll, but if they are made through payroll, it's the employee contributions that are made through payroll, not the employer. So, right, because for example, employer contributions are not reported on the W-2. So if the funds have not even been deposited, you could just clarify with the payroll provider that these contributions are not going to be made, right? Because they don't need to know, doesn't need to go through payroll. And then you could just make the contribution as an after-tax contribution. Those funds can be transferred from the personal account or the business account. There's no requirement that they come from either, directly to the voluntary after-tax account. The key really is that they're within the contribution limits, they're made to the correct account, they're made by the contribution deadline. So they would need to go into a separate, dedicated, voluntary after-tax account before they're then moved to the Roth Solo 401k or Roth IRA. Now, when you make a voluntary after-tax contribution, it's technically an employee contribution, but it doesn't need to be reported on the W-2. If you look at the W-2 instructions, it's clear that the voluntary after-tax contributions, the reporting of those contributions is optional. Moreover, it doesn't need to be reported on the business tax return or the personal tax return. So bottom line, the voluntary after-tax contribution doesn't need to be reported, but the subsequent transfer to the Roth Solo 401k or Roth IRA. So it's a two-step process when you make a mega backdoor Roth contribution. You first make an after-tax contribution to a separate after-tax account, and then move the money either to a Roth Solo 401k or Roth IRA. So that second step, the move to the Roth 401k or Roth IRA, that is reportable by the plan as a conversion So if you go to our website, mysolo401k.net/forms, you can submit the applicable form, whether it was after tax to Roth 401k or after tax to Roth IRA, to give us the information we need to prepare the 1099-R. So that answers the next good question from Lisa about the reporting of the after tax to Roth, which we'll handle that as an optional free service. Just be sure to submit that online form at the time of the transfer. We definitely can give you a call to go over it. As far as it may have just been a semantics with your 401k provider who didn't understand and was using imprecise language. So it's hard. That's just a speculation. Obviously, we weren't the provider. All right. Well, that takes us to the end. So please don't hesitate to like and subscribe. We would really appreciate that. Yes, employer contributions are also a business expense. Okay, until next time, everyone, take care.